Hey, so bad gaps are a great 4th of July holiday and definitely have a lot to unpack, so let's dive in. Hey, welcome to this week's Mortgage Minutes with Mitch. I am Mitch Jenkins, Senior Loan Officer with Your Home Financial. So this week's headlines, we had Jerome Powell testifying in front of the Senate, kind of giving an update on the state of the economy. So while he didn't, set any dates or tell us any specifics of when things will happen, his tone was definitely that we are seeing meaningful progress. And even over the last couple of weeks, we've had a lot of members of the Fed come out and say similar things. Not everyone thinks we should cut rates, but they are starting to see meaningful progress towards inflation. We also had great news from the CPI report showing that inflation was actually negative for the month, minus 0.1%. It's the first time for a month-over-month reading we've been in the negative since May of 2020. That's progress. So year-over-year inflation is running at 3%, down from 3.3% last month. So we're getting there and approaching that 2% mark. Some concerns, though, to watch. Let's start with the Atlanta Fed. So every single week they release their update on what they expect GDP to be, their estimation. So for second quarter, they were just a couple weeks ago at 3%. Well, they've since revised that down to 1.5%. So we've had the GDP estimate for second quarter cut in half. So they definitely know something to revise it by that much. Now also, this is something I've never talked about before, corporate bankruptcies. Now in the month of June, there were 75 corporations that filed for bankruptcy. Year to date, we've had 346. That's the highest total in 13 years. So not a great sign on the overall health of the economy and the job market, and certainly something the Fed needs to pay attention to, because while they do need to control inflation, their other goal is to maximize employment. Now the next Fed meeting is July 31st, so at the end of this month. And there's going to be some major reports that are going to hit right before then. So on the 21st, we're going to see the QCEW. Now I brought that up a few weeks ago, and that's the actual employment numbers. It takes a while to get the actual. So the Bureau of Labor Statistics has modeling that they do every month, and based on that modeling, they've been coming up with some ridiculous off-the-wall numbers. Now the QCEW report is actual verifiable numbers of jobs, and what it looks like for fourth quarter of 2023, the Bureau of Labor Statistics was inflating them by an insane amount. So once that number gets trued up, I've told you before, revisions don't have the same impact that the actual initial headlines do, but this is going to be a massive number that the Fed cannot ignore. For the 26th, we get the PCE number. So that's the Fed's favorite measure of inflation, personal consumption expenditure. So that's going to come out right before the meeting. Now, nobody expects them to actually cut rates, though, this month. Everyone's eyeing September. So September 18th, the Fed meeting is, the market's got it in at about 90% certainty that they expect that to be the Fed's first rate cut. We'll see. I've heard that before. We've had some odds makers be wrong in the past, but hopefully we're looking at interest rates coming down in the near future. So don't let that hold you back from buying a home now, especially if you want to get in before the school year begins. There's still a lot of activity in the market. Would love the opportunity to help you. Let me know what I can do. So as always, thank you for watching. Please take a moment to like this video, and we'll see you next week.